What can home buyers expect in today's market when buying a home? I'm here today with Angie Kuzma from Stratton Group. I'm Roy Burr with Fairway Home Mortgage, and we want to talk today about just that, the home buying process. And Angie, you've been doing real estate for how long?
15 years.
15 years, wow, that's amazing. I'm 11 years in the business, and we've helped many families over probably the past 3 to 4 years together.
Yep.
And one of the things I know that we always are really passionate and focused on is making the process feel simple and approachable. And we're also gonna highlight just that with a current client that we're working with and show how we make it simple, how we make it approachable, how we help people into a home from start to finish.
Yep, I love it. Okay, so let's get going. Let's start with explain the difference between getting a buyer pre-qualified versus pre-approved for a home loan.
That's a great question, Angie. A lot of people have different understandings of that, and so I spend a lot of time actually clarifying that with my clients. And the biggest difference is a pre-qualification is a very simple look at the client's profile. So you're probably running credit, you're probably having a basic conversation, maybe they filled out application online, and then you determine that they have a qualifying FICO score, that on first appearance, on first glance, things look good, and you can issue a pre-approval. So when I say things look good, maybe good credit, good debt to income ratios, their employment history, but that's all face value because not verified yet. Okay. And the pre-qualification is the next level of verification where we're gonna request documentation from the client. We're gonna look at actual pay stubs, W-2s, or tax returns if it's a business owner, and really go deep on the income and employment. Really go line by line on the credit, do a very thorough job so that we can be airtight on what we're explaining to the client and what we're explaining to you in regards to, hey Angie, this client is qualified for $400,000, here's what their payments look like. We verified all the documents, and plus I know that listing agents, and you have a lot of listings, right? What do you like to see on the offers?
Yeah, if I'm on the listing side, I definitely like to see that people are pre-approved and they've gone all the way through the process where they've provided documentation and we know that it's a solid buyer.
Yeah, exactly. So it helps the offer stand out. It helps the sellers feel good about accepting it, knowing that the buyer has done that extra step. And so that's the biggest difference on the pre-qualification versus the pre-approval.
Yeah, and so from an agent perspective, I would highlight that it's really important for people to speak with the lender prior to going out and looking at homes and all of that. A lot of times people think that they start with the real estate agent, but really we want to get through the process with the lender so that we have the ideal price point picked out. We don't want to go show people houses and get their hopes up and, you know, with a house that's too expensive and it would make them feel like, you know, they can't afford it every month. And so always good to talk to the lender first and then come up with the ideal price point and then start looking for houses.
Yeah, that's awesome. And you heard it there from a very seasoned agent that you should talk to the lenders first, right? So that's a great point to make.
Okay, so you mentioned documents that are needed to get people through the pre-qualification process and the pre-approval process. So let's just highlight the exact documents one more time. For sure. So we have what I call the standard needs list that we typically request upfront in the very beginning, which is going to be things like your government issue IDs, which could be driver's license, passport, social security, pay stubs, last 30 days of pay stubs if they are a W-2'd employee, the past 2 years of W-2s if they're a W-2'd employee, if they're self-employed, tax returns, federal tax returns, business and personal. If they are like commissioned or overtime income, we're gonna request things like looking at a 2-year history of that, so we might even do verifications from the employer. I like to ask for the year-end pay stubs whenever you're looking at what's called a variable income situation on things like overtime, commission, bonus. That way we can average the past couple years, because if someone sends me the past 30 days of pay stubs for this most recent 30 days, I'm gonna see a year to date on the overtime, but I'm not gonna see last year's overtime. And we have to make sure that last year's overtime is on track for this year, or it's like similar type of income in that regard. Okay. And so the W-2s don't show that. The W-2s will just show a lump sum of the gross income. Okay. So whenever you hear a lender asking you for, hey, can you send the last 2 years or the last year-end pay stub, that's most likely why. They want to look at your commission, overtime, or bonus
for that year to help tie in the income. And there's so many different scenarios out there that can require us to request additional documentation. So for example, if someone is recently divorced, we need to look at a divorce decree. If someone receives child support income, we would need the child support documentation. If someone, let's say someone told me that they just paid off an auto loan, we would request the documentation showing that that's been paid off. So there's a lot of scenarios, too many to mention all at once, but the great news is talking with the lender, like you said in the beginning, helps you start chipping away at that list. What I tell the clients is, hey, if it seems overwhelming, I understand. Send what you have right now, and we'll work through the rest as we go.
Perfect. Yeah. So can you give us an idea of like what's that approximate timeline? If I call you and I want to get a loan, how long do you think it would take me to get through the pre-approval, pre-qualification process?
Yeah, great question. So if someone has everything prepared, has all those documentation ready, and they do the pre-approval review or fill out the app link or phone app, within 24 hours, we're going to have answers for them.
Oh, perfect.
Yeah.
Okay. Not too complicated then, nice and easy.
And that's if they have their documents prepared, right? Sure. So if you're watching this video, keep that stuff handy, and that way when you go to a lender, you can have a fast answer. Otherwise, it's going to vary on when that client sends those docs, but we'll still have an initial review done within 24 hours.
Okay, so basically proof of income, taxes, and bank statements. Those are the main three. Yep. Am I hearing that right? Okay.
Yep. So Angie, now that we have them pre-qualified and we have verified their income, we verified where they stand on purchase price, loan options, and all that, I call you and I say, Angie, great news, the client's pre-qualified. They can buy a home for $400,000. Take them out and have fun on their home search. What happens next?
Yes, so then we move into what we call a buyer presentation or a buyer consultation. So we sit with the buyer face to face and we go through the whole process. So what does it look like now that they're done with the loan? What can they expect when going through the process of looking at homes? What can they expect? What's the process of writing an offer? What kind of documentation is needed? What's the process once they find a house? And it gets approved, and then we go through inspection. So we walk them through all of that just to kind of set the right expectations so everybody knows what to expect from start to finish. We always say surprises and emotions kill deals all the time. So we try really hard in that buyer consultation to prevent any surprises. So that way everybody knows and everyone's on the same page.
Yeah, no, it's great. That's great. It's very, very thorough. How long does that typically take if they're coming to meet with you?
Our buyer consultation is usually about 30 minutes.
30 minutes? Okay, okay. And what does the home search process look like? Are they going through their wish list of what they want in a home, or like what part of town, or how does that usually go?
Yeah, so we kind of have people break down their requirements in a house versus their wants, because sometimes their wants and the requirements don't necessarily match up. So obviously we try to find the perfect house that meets everything that they want and they need. But we kind of, some people are like, okay, well, a third car garage would be great, but I don't necessarily have to have it. So we try to set up a search when they're looking for houses that's a little bit broader. And then that way we don't miss anything that might be the right one. Okay. So, and then when people are looking for a house, typically a lot of people actually find the house that they want the very first day we go looking. And it surprises a lot of people, but it happens quite a bit. So we look at houses, figure out exactly what it is that they want. We put an offer in, making sure obviously that we're staying in communication with the lender to make sure we're in the right price point. And I always like to get a payment broken down so people know what to expect. We don't want any surprises when they get that first mortgage payment.
Yeah, no, definitely, right? That's kind of a common theme. How can we prevent the surprises? How can we set the proper expectations for the clients? Because there are variables, just like anything in life, things that we can't control. But when we understand, okay, here's things that we can't control, as long as we set good expectations, that definitely goes a long way.
Yeah, for sure.
What's like an example of like some common requirements that you hear from people and that they want in a home versus like the wants?
Yeah, so swimming pool, I would say, is often a want, not a need for a lot of people. And then the third car garage is a really big one. A lot of people think that they want an extra bedroom, but they don't necessarily need an extra bedroom. So sometimes we can find them one maybe with a den instead of a fourth bedroom or whatever it is that they're looking for.
Okay, awesome. And then how about, do you ever hear hey, I don't want to live in an HOA, or hey, I do want to live in an HOA, or how does that usually go?
Yeah, we try to kind of break that down during the buyer consultation and get that figured out, because yeah, oftentimes people end up purchasing exactly what they say they're not going to. So they'll say, I do not want a 2-story home and I have to have a pool, and they end up buying a 2-story home with no pool. So, yep.
Gotcha. Okay. So buyer finds a house. Let's say the house is listed for $350,000. How do you go about figuring out what to offer on that home?
Yeah, great question. So we look at everything that has sold in the neighborhood and what the competition is in the neighborhood, and of course making sure that we're staying within what the buyer can afford. So negotiating is my favorite part of real estate. So that's always the fun part, when an agent's skills can kind of come into play and help people get the house that they want for the best price. So different things we can counter. Obviously we can counter the price. A lot of buyers right now, we're getting the buyers closing costs paid for by the seller. So that's a big piece of negotiating. So we'll call you and say, okay, Roy, how much closing cost does this person need in order to get the house without having extra money out of pocket? And so then we can add that into the offer to get the seller to pay that. So as little money out of pocket as possible for a lot of buyers.
Awesome. Great, and I can definitely attest to the negotiation skills. When I want a closer, I'm calling Angie. Yep.
All right, we get the offer accepted, and so I'm gonna send you over a copy of the accepted contract. We're gonna get escrow opened, and then you're gonna take it from there. So tell us what's next.
Yep, and we take it from there. So we get the fully executed contract, and then we have 3 days to do and issue what's called the initial loan disclosures. So what we're doing is we're reviewing the contract details for things like the purchase price, the financing type, which typically will align with what we've issued on the pre-qual, but we got to double check that. What's the close of escrow date, what title company is being used, and then that way we can search that title company's fees, because we're putting together the loan estimate, the official loan estimate, which will highlight the loan terms. It'll highlight closing costs. Closing costs are going to be things like you have processing, underwriting fee, you have appraisal, you have the title fees, title insurance, escrow. You have the other things that we factor in that's not typically it's not technically classified as a closing cost, but we have to factor in as cash to close. We have impounds. We have impounds for taxes. We have prepaid insurance. There's prepaid interest. So there's a whole lot that goes into building that loan estimate and then issuing the initial loan disclosure to the client. Okay. Once the borrower gets the initial loan disclosure package, a lot of times, same thing, we like to meet them in person to review that with them, or on Zoom, or at least make sure that we're talking to them and talking through that package. I like to say, hey, you're going to receive a really big package of loan disclosures. A lot of it is government issued, government required loan disclosures, and we want to help answer questions on that, go through your loan estimate with you, and help you sign those. One of the things that comes up a lot of times in the initial loan disclosures is maybe some things that need to be updated on. Maybe the client made changes on what they want to do for the loan, or maybe they have something we need to update on, like their application. And so what I always say is, hey, the loan disclosures are a living, breathing document that we can update throughout the process. Once we get to final closing, it's the final version of that gets recorded. Once those are signed, we are then doing what's called loan processing. And the loan processor is another pit stop of verifications. There's a lot of verifications that happen in the loan process. And so the processor is packaging the loan and preparing it for underwriting. And they are doing also the official verifications of employment, if we haven't done that yet. They're reviewing the income. They're reviewing my work, making sure that I did my income calculation right, things like that, making sure I didn't miss any signatures or large deposits on the assets, or just things like that. Again, looking to prevent surprises down the line. Loan processor then submits the file to the underwriter. The underwriter is another pit stop of verifications. Can you believe that? So the underwriter is going to do the same stuff. Look at the income calculation, make sure that the income, assets, credit, employment, and collateral is the home, right, meets whatever financing guidelines that we're doing, right? So if we're doing a Fannie Mae loan, if we're doing FHA or a VA loan. They are all similar, but they all have a lot of differences too in regards to guidelines on things like income, asset, and credit. So the underwriter is verifying that it meets all guidelines and issuing what's called the initial loan approval. And so at the initial loan approval, during that time, we're also coordinating with your team on things like the home inspection process so that we can know when to order the appraisal. And so typically what will happen is our team is pretty fast and we'll usually have an initial loan approval before the appraisal is ordered or before the appraisal is in. So when we say, hey, we have a conditional loan approval, that's a good thing because that means that the initial package has been approved. The conditions are going to be things probably like the appraisal. Maybe if we need updated documents, updated pay stubs or asset statements, homeowners insurance, right? Because during that process as well, where the borrower is getting homeowners insurance quotes. And again, usually when we're done with the initial underwriting, those quotes maybe aren't finalized quite yet. So that's typically when we do a very thorough job in the beginning, the condition list should really just be the appraisal and maybe the homeowner's insurance. So once we collect those conditions, my processor works directly with the client and the underwriter to get those conditions back to the underwriter for the final loan approval. So we have pit stop with processor, underwriter for the first time, underwriter for the last time at that final loan submission. And then we get the magic words, CTC or clear to close. I get to call the client, I get to call Angie and say, hey, congratulations, we have a clear to close. Your loan has been fully approved through the underwriting department. We are gonna work now with our closing team to get the loan docs to title. The closing team is going to balance all the final numbers on the closing statement, verify if anything has changed on any of the numbers, which typically they don't, but sometimes, if there's maybe if the borrower elected to do an extra home warranty or something like that maybe they added on later, things like that can happen. So we're doing final verifications on the numbers, sending the loan package to the closing, to the title company, and scheduling the closing. And typically, I know your team works very well to schedule those closings with the title company. Yep. Borrower and you and your team will go sign with the client, and then we will fund the loan and you'll issue the keys.
That's the exciting part.
Yeah. And so I know that I just threw a lot of information out there that may sound scary and intimidating and like a lot of work for the borrower, but really what the borrower is doing through that process is checking their email, making sure that they look for communications on email, phone call, and text for my team reaching out for docs, and then they just submit those docs to us. We handle all the rest.
Yeah, I think that's an important point because we get a lot of buyers that'll say, oh my gosh, I gave everything to the lender that they needed and now I just got an email for more stuff. Is something wrong? So I think it's important just know that that's completely normal. That's what happens. The buyers give everything and then the lender wants more and then they give more and then the underwriter wants more and then they give more and then the closer wants more. So it's all normal, part of the process.
Yeah, it is normal, and that's a great point to make because there's a lot of emotions that happen. It's the biggest transaction, biggest purchase that most people will make in their life, and so there's a lot riding there. And there's the dinner table conversations where I always tell my team make sure we're updating our clients even if there's no update to give. Right? Yeah. It's like, hey, I just want to call you and let you know I didn't forget about you. Your file is still in underwriting. And there's no updates today, or hey, we need a couple documents. And again, that is normal part of the process, which is good that we're explaining this, because if you're not hearing this and you go through the process, you're gonna think, like you just said, hey, why do I keep getting asked for stuff? But it's part of the process, right? So if you're prepared for it, if you know what to expect, you're not going to get frustrated or worried or scared, because that's the biggest thing, right? They probably get worried and scared, like, hey, maybe my loan's not going to go through, right? Exactly. Yeah.
Okay, so while you guys are doing all of that, we're working with the buyers on a regular basis, getting them through the home inspection process. So We do inspections, the general home inspection, plumbing inspection, termite inspection, roof inspection, and typically an HVAC inspection since we're in good old Tucson. So can you tell us a couple things that will make a house not qualify for a loan in regard to repairs?
Yeah, so it's typically going to be health and safety related issues. So for example, if a lot of things that we see that are called out by the appraiser are going to be things like the fascia, right? Depending on the year of the home, if there's peeling paint, that may need to be remedied. If there's broken glass, if there's exposed wiring, if the flooring has exposed like nails, or like it's not a finished floor where people can step on something and injure themselves or fall. Typically that, if a pool is maybe doesn't have the water in there, it's just empty, maybe needs to be covered. So just think of anything that's health and safety related would need to be remedied before the final loan approval.
Got it. Okay. Yeah, so we get through the inspections, and then we always suggest to the buyers that we ask for the 3 most expensive items, or health and safety items, of course. So if we do home inspections and we come across those things, doesn't mean that there's a problem with the deal. It just means that we need the seller to correct those items prior to being able to close on the house.
Great. And actually that just reminded me, there's a couple other items. There needs to be a cooking source. So there has to be a stove there, because you think health and safety, well, health, everyone needs to eat food, right? So your home has to have the ability to produce food for the people that live there. So you'll need to have a stove, typically, as well as a heating source. In Arizona, yes, the AC, right, HVAC is pretty much a must, but actually what's required is a heating source. So the guidelines actually require on, like, for example, FHA, if there's not a functional heating source in the house, or maybe even sometimes in just one room, we've seen like where maybe it was an addition to a home that does not have an active heating source, that would need to be fixed as well. So those are a couple other things that are important to know.
Got it. Perfect. Good to know.
Yeah.
Okay, so after we get through all of that, let's walk through the appraisal.
Yeah, so the appraisal technically can be ordered at any time. So it can be ordered on day one. It's ordered, the borrower will request it. It can be on a phone call, text, or email. Hey, Roy, order the appraisal. And so there's a little bit of strategy involved with the appraisal. And so I say that because the appraisal is one item that, once it's ordered, is a non-refundable cost. And so that being said, on average, $600 for an appraisal. And so it's just something to be aware of. That's a good healthy chunk of change for someone, right? So if you order an appraisal and end up canceling, maybe due to inspections, then you're out $600. So typically what we see is your team is helping to get those inspections completed and making the borrower feel good about taking that next step of ordering the appraisal. Once they know, hey, the inspections are handled, we've gotten our repair items negotiated, let's order the appraisal. On the flip side of that, if it's a fast closing, if it's like a 2-week closing for maybe, again, the seller needs to sell fast or the buyer needs to buy fast, then you typically probably want to order that appraisal on day one, right? So the strategy, again, though, is we're talking through it with you and the borrower, and knowing that which approach we want to take. And then once we order the appraisal, the turn time currently typically 3 to 5 business days, and the appraiser is going to do what's called a comparable sales approach. In the appraisal, you're actually going to see 2 values. The report will show the cost approach, which is like what is the cost to like build this home, if you're going to build it from scratch. And then the comparable sales approach, which is taking a market analysis of recent sales that have closed that are comparable to that home. And so typically the appraiser is going to keep things in a close radius, right? Because in real estate, there's so much that goes on into location and value. And certain parts of town, they may have higher sales values than other parts of town. So an appraiser is not going to, let's say we're buying a home in North Tucson, the appraiser is not going to pull comparable sales from East Tucson. It's things like that, right? unless there is not a lot of comparable sales in the radius. Then they'll go further out. So the appraiser is going to start with the close radius and then go further out. They're also going to try to start with years that are homes that are similar in square footage, similar in year built. But again, there's so much nuance there that maybe this is a brand new home that was built in an area where a bunch of old homes exist. Well, then the appraiser is going to then use those old homes still, probably, right? So there's a lot that goes into that, but the appraiser is typically going to go out and walk through the home and inspect the home, but not like a home inspector, right? They're basically walking through, and anything that they see visually that may be concerned, they'll call out and actually backtrack a little bit too. If there is, earlier you had asked, hey, what type of things get called out in a home? So they're gonna be looking through the home, and one of the things they look at is the ceiling. If there's water stains, they're gonna wanna know, hey, what are these water stains from? Is this something that there's a leak that needs to be fixed? And again, anything visually, if they see the broken glass or whatever, they're gonna call it out. Other than that though, they're not checking every outlet or anything like that. So they will then issue the appraisal and give the value to the home, of the home. And so three things will happen. You'll get an appraisal that's at value or over value, which would be good, right? And some instant equity. Or you're gonna get an appraisal that's below value. And you also might get an appraisal that wants those repair items done, right? Which is called a subject to repairs. When we have an as-is appraisal, that means there's no repairs required. Now, if the appraisal comes in low, this is a common question we get, what happens then? I'm calling Angie, I'm saying, hey Angie, appraisal came in low, how do you want to approach this? And so, what does that typically look like if you're getting a call from me and advising you of that?
Yeah, so if the appraisal comes in low, then we know the buyer can't get a loan for more than the appraiser saying the house is worth. So either the buyer has to pay that difference in cash, or we have to go back to the seller, and then again, we negotiate and try to get the seller to drop the price to the appraised value, or sometimes that's another negotiation piece where we kind of have to meet in the middle a little bit.
Okay, great. So it's kind of like a renegotiation situation. And sometimes what I do see too is, I do see situations where the listing agent, buyer's agent, or, seller and the buyer, they're trying to make the deal work. They're collaborating and working together, but the numbers are off for maybe what the seller needs to net and the buyer needs to come in with. And they come to me and say, hey, Roy, what can we do? So there's actually a process that's called the reconsideration of value process, which has to be requested by the buyer. But again, if it's a situation where, hey, this is my dream home, I don't want it to fall through, let's see if there's anything else that can, validate the value. We'll do the reconsideration of value, which does require that we provide the appraiser with additional information as to why we think the value might be higher. Typically, that's going to be comparable sales that maybe the appraiser may have missed or not used. And the best time or the best comps to use are going to be, again, recent sales, close proximity, similar to the home in year and all that stuff. We send that back to the appraiser and say, hey, Mr. and Miss Appraiser, can you reconsider the value? Here's the information that we think supports the value. And the appraiser will respond and either agree or sometimes still hold firm on that value, and then we'll report back on the findings to the buyer and to you. And then let's say that value comes back where we want it, then we can then take that appraisal and have the underwriter sign off on it. We've covered a lot. We've covered pretty much start to finish, pre-qualification. Remember to reach out to your loan officer early in the process. We should be the first ones that you reach out to. That way I can then refer people back to Angie and her team. But we've talked about getting pre-qualified. We've talked about the home search and the buyer consultation. We talked about loan disclosures, loan processing, what documents to send in during the loan process, underwriting, appraisal, home inspection, closing. And we actually have a client that we're currently working with that is at what stage of the process, Angie?
Yes, it happens to be my daughter, so you've been helping us with it. So we've gotten her through the pre-qualification process. We're not quite to the pre-approval process yet. So right now we're in the process of gathering all the documents. So like Roy mentioned, all the bank statements and the pay stubs, all of that. So yeah, it'll be interesting. As we go through this process, we're going to keep documenting it so people can see it really from start to finish. So right now is the very beginning. So starting that loan process, we're doing home inspections on Saturday. So we'll take some clips there so we can kind of walk everybody through.
That is so cool. It's such a cool story to share and such an honor to help your daughter. Thank you so much for the referral. Yeah. And we'll promise we'll take great care of her, get her a great deal.
Yeah, we're excited.
So stay tuned for the future videos on what we're gonna be doing is going deeper on the process with your daughter on what her experience is gonna be like. So she's currently doing the home inspections this weekend, like you said. Yeah. When we talk next, you will be able to highlight again what her experience is like, what she's doing, how she's doing, you know, the home, all that great stuff. So stay tuned for that. Excited to share.
Yeah, it'll be good. Okay, real quick before we end, let's do a couple FAQs.
What you got?
Okay, first one, can I buy a car while I'm qualifying for a loan?
You know, there's the do's and don'ts of the mortgage and buying process, and that's one of the things we say not to do because it can drop your scores if they're pulling your credit. It's new debt that now we have to factor into the debt to income ratio, which may cause someone to not qualify.
And the next FAQ is, should I go pay off all my credit cards before trying to qualify for a loan?
I would advise not to do that and talk to me first, because what I explain is I will help you use your resources to get the best bang for your buck. So you may not need to pay all your credit cards off. You may not need to pay any credit cards off, or you may need to pay some off, right? And so if you have $5,000 set aside to pay credit cards off, and I say, hey, you know what? You can actually pay $2,000 down towards on your credit cards. Your scores will jump to, you know, by 30 points, 40 points. And then, but anything above that's kind of overkill, right? So if they're gonna spend $5,000 to get the same 30 points, when they can spend $2,000 to get those 30 points, which would you rather do?
Yeah, for sure.
Yeah.
And the last one is, what is the minimum credit score that I need in order to purchase a home?
Yeah, so we actually have our FHA program that goes down to 500 on the FICO. Wow. And typically that's gonna be with a 10% down payment requirement. And then 580 is the next threshold on FHA, where you can do the minimum 3.5%. So those are the minimum credit scores.
All right, hopefully you got some good value out of it, Roy. Thank you for joining us today, be part of our conversation. And if you did find value, like, subscribe, make sure you follow us so we can continue to keep giving you value in the real estate community.